Guys, how you doing? Welcome back to the channel. Today I want to talk about something that's been weighing on me quite a bit lately. This has happened more than I thought it would ever happen, which is individuals will come up to me and they're financing their rental properties on what is possibly the worst loan ever created to own a rental property with. And there's different loans you can buy rental properties with. Now this may be very, very common sense for a lot of you, but for some of you, right now, I'm about to shine a light on something that you may or may not know that you're doing incorrectly, and you're about to realize you need to go refi and change out to a different loan quick, right? Because the reason why we buy a rental property is obviously the cash flow. We want that passive income. We want to layer that passive income. Say we're net $300 after liabilities for the month. That's our cash flow. And if you buy 20, 30 houses that make you $300 a month, you're financially free and no longer have to work. But there's other benefits to owning rental properties. Long-term appreciation, right? That property can go from $100,000 to $150,000. We also can write off the depreciation and get those tax benefits. But ultimately what we really want for our long-term retirement planning with these rental properties and these assets that we own is we want principal pay down, right? And I want to go over the difference between interest-only loans and amortizing loans, because this should be common sense, but for a lot of people that are brand new in the business that don't get any formal training, or they just hop in, they go out there in search of money. And then they find this lender that basically gives them the spiel and makes them think that there's some good Samaritan trying to help them with their business, and they don't really know who they're working with. Have you ever heard of what's called a predatory lender, or someone who may not have the best interest in the heart of the borrower? That is what's happening if your lender is giving you a hard money loan to own a rental property, or an interest-only loan to own a rental property. Now I know some people do this for some reason. They hold it for a short time with the intention to sell it. But if you're buying these properties to hold long term, they will never pay down if you're only using interest-only loan. So let me show you how this works. First off, here's a good site to go to. I'm not affiliated with them. I don't get anything from sharing this with you, but guys, this is called amortizationcalc.com. It's gonna really show you how to crunch numbers and how to look at amortizing loans. You can plug in the year, you can plug in the interest rate, and you're gonna see the payment and how it pays down. So for example, this amortizing loan right here, what we see is a principal pay down over time. They're front loaded with interest. So this is a 30-year, $100,000, 4.75% loan. Pretty typical for most investors right now. When you get this loan, you're gonna have a $522 payment. That's your payment each month. That's not counting taxes and insurance. $396 goes to interest. $126 goes to principal. And as the years go on, those numbers switch and more gets paid down towards principal and less towards interest. Really, the first 7 to 9 years are front loaded with interest. But as you own these properties for a long time, property values go up and principal starts going down. So you start gaining equity in the property, which is what we want. Here's what's scary. Interest-only loans, you're only paying interest monthly until one principal payment at the end when you pay off that entire $100,000 you borrowed at one lump sum. And I know some people are doing this and they're counting on speculation, they're counting the property appreciates because they can't get this type of loan, but this is very, very dangerous, guys, and plus you're never gonna gain all the benefits that you're wanting with a rental property. What we need is to pay down principal amount. So if you have an interest-only loan, this is what it's gonna look like. Every month you're paying interest, the same amount of interest over and over and over and over. You will never pay down the principal balance or the amount that you owe on the property. So guys, if you have an interest-only loan right now, you are not buying the house. It is not paying down, if that makes sense. And I've had this happen multiple times in really the past few weeks where people have come up and they're talking about their rental property and they start telling me that they have an interest-only loan, and I'm having to explain to them that they're not paying the property down. They're just paying interest on it, and that loan balance will always be $100,000. It's very scary, guys, because this is not a favorable loan to you. You have to get a loan that's amortizing. So if you have an interest-only loan right now, guys, you need to start going out to banks, interviewing with them, find someone that can basically refi you into a different type of loan that's gonna start paying down. Now go and mess around with this site right here, guys. It's gonna show you kind of how numbers crank up, and you can kind of mess around with them a little bit to see. But if you have a house financed on an interest-only loan, you need to go get this fixed, guys. It's not gonna get you the benefits you want with your rental properties. I don't know who taught you this, but I had to film this quick video because I've seen this happen way too much around the country as I'm traveling around. And I know this seems common sense to a lot of y'all, but if you're very, very brand new, guys, this video is for you, just to make sure you're not getting in the wrong type of loan. I try to film on this channel videos that help brand new investors, and then some more advanced strategies that help those mid-range investors, and then I try to put some highly advanced strategies on there as well that these new investors and mid-range investors sometime will kind of work their way up to. But this video is primarily for you brand new investors. Make sure you have an amortizing loan, guys. If you like today's video, or if you have a loan like this and you want to give me a call, guys, I'll help you. I don't want to see you in a situation that you can't get out of. So follow us on this channel, subscribe by hitting that button below, like, share, and comment. Put these videos out there to help more people, guys, and I'll see you on the next one. Have a good day.